Hello again, traders, and welcome out. This is Ankit from Currencies here, and this is a market recap for Tuesday, September the 27th. Let's break down today's market price action and talk about our upcoming 24 hours here and do a quick market analysis. So let's just start with the equity markets, and we are not really seeing the markets catching a break here. Again, last 24 hours were a bit more eventful. Saw a bit of a roller coaster move overnight. Markets were actually up, and we actually did converse a lot of those gains towards the end of the day. So you can see that the market price action again remains weak. We're seeing these rallies, but rallies are not really holding here. So it was a small percentage day. If you look at the percentage changes today, the S&P was down 0.21%. World Stock Index was down 0.34. So percentage wise was not really a big mover. But if you look at the intraday price action, equity markets were up about 1.5% when the markets opened up this morning. The fact that we gave up all the gains and then still end up negative, it's not really a great sign. So I think this is where not really getting that relief rally, and even though we're getting that relief rally, it's not really holding those gains. So very cautious here as far as the direction goes. And the exact same thing, getting the wicks on these candles, which means that we are trying to make a run, but we are failing. So pretty bearish price action across the board. And now taking a look at the cryptos, again, cryptos finally did weaken a little bit as well. So there is a bit more of that to catch up happening in the crypto markets here. So overall markets, nothing has changed. Everything remains weak. And I think unless we can really get a market moving different way, we'll probably see a more continuation or consolidation around these levels. So as far as our market outlook goes, it remains at a -2. But at the same time, we identify that we are at these little extended levels. So maybe some consolidation before we take another leg lower. Seems like the right play here. But at this point, at the same time, like I said before, it looks extended to jump in at this point, but at the same time, it's not a buy either. So we're just sitting in this sideline position, trying to figure out where the conviction is, because right now we're getting mixed signals here. So let's take a look at the schedule here. What's really the focus, as we discussed before, Thursday and Friday is really where we have some news events, Canadian GDP, and we have the core PCE price index out of the US. That's it. So I was out of that, really not a whole lot this week. And I think this is where market likely to just move around with this market volatility. So looking at the percentage changes for the day, again, cryptos were down across the board. Bitcoin and Ethereum, again, down close to that 1% mark. But then we have more weakness in other cryptos like Solana or Bitcoin Cash. But overall, again, it's just short-term bounces that continue to fail. Now, looking at the currency market, getting a bit of a mixed bag as well. But again, like I said, overnight, when we look at the markets, things were looking a lot different. We had Kiwi was the strongest currency. We actually had Kiwi was up more than 1% again against some of the major currencies. Australian dollar was the second best currency. And you can see the way we ended the day, Aussie actually being weaker compared to the Kiwi. But overall, we are noticing not a whole lot of big percentage change moves. You know, when we are seeing this 2 to 3% changes, this 0.2%, it seems like a very small percentage change move. The biggest percentage move today was about 0.5%, which was from British pound, which again, we saw that flash crash on a Sunday, and we're just seeing a bit of a recovery off that capitulation event that took place. We have the divergence continue to play out between the euro and the Swiss franc, and I think this time around we saw a bit of an opposite divergence between the Aussie and the Kiwi. So overall, not a whole lot. Again, dollar was flat, and we have seen the Japanese yen was down a little bit. So notice that Japanese yen is not really giving up all its gains here, which is again something we'll be focusing on when we look at the charts. As far as the velocity goes, like I said, nothing has really changed in the market. So dollar overall still has that strength. Even though we get these pullbacks, they're quickly bought out. The yen, on the other hand, is also holding these levels quite nicely as well. Again, not against the yen, but if you take a look at yen basket against other major currencies, it's actually holding really well. We have the Kiwi and the Aussie, again, going to be, or velocity-wise, they're in the negative score. And then we got some currencies right in the middle, Again, pound, which was a -2 and a -3, and the velocity has actually gone a little bit better. So not really a whole lot of conviction, as you can see. Everything stays overbought or oversold levels. When we take a look at the RSIs in a lot of these charts, we'll see that they're just extended to these extreme levels. So unless something really changes in the markets, I think we'll probably see markets continue to do the exact same thing what we have seen so far. So let's take a look at possible trades here and talk about our upcoming day. And let's just start with the US dollar. And you can see the US dollar, I mean, let's go on a daily chart. This thing, again, I've talked about it. It's at a very extreme levels. The levels are as extreme as where we were back in May. I mean, we are now just not really getting these pullbacks. It's just staying very strong. So this is, again, I would always recommend when you have these extreme readings, it's better to wait for the price action to kind of come to you, because price action can stay up in that overbought level for some time. But that doesn't mean if it's overbought, we need to sell it right away. We need to kind of wait and see where the rally will fail. And so far, if you do a top-down analysis, I mean, it looks extended, looks like it's topping out, but if you go on a shorter-term time frame, I'm not seeing any reversal yet. 4-hour chart, hourly chart, 15-minute chart, they're all kind of doing the exact same thing. So dollar, again, remains at the same place here. And I want to talk about yen here because, I mean, look, remember the yen intervention that took place last week? We got a giant candle off of that. So let's just take a look at the Japanese yen basket just to see where it is. As you can see, we got this low and the high here. And we actually have stayed within this candle for the most part. We got this little breakout over here, but at this same point, you can see we are just sitting and consolidating here. If I go on a 4-hour chart, we are going to be seeing that this is still consolidating. So technically speaking, this is still a bullish setup here. Maybe it's not really have the catalyst to move higher because the dollar is really strong. But I mean, we can't ignore the fact that we had this rally, but the rally really hasn't failed yet, which means I still like yen to the upside. Now, outside of the yen and the dollar, we can talk about other currencies that are kind of mixed bag, which is like the Canadian dollar. You can see a lot of messiness here within this chart. So we have some clarity on other charts like the Kiwi, where it just continues to fall. And you can see, like last night, if you look at the hourly chart, you can see we got a nice little rally last night. And the rally just totally gave up. So when the price action is sitting at a -2 or a -3, usually we get these bear rallies where it really fails. So we need to see a rally that holds up. Yen is a good example. If you take a look at this, it has a rally, but then it actually held up. So this is a long consolidation here. So I do like some of the yen crosses that I'll be paying attention to. So let's find out what we can sell. What looks more weaker outside of the Kiwi? Because same problem Kiwi has. If you go on the daily chart, Kiwi is sitting at extreme levels on the downside. So outside of that, let's find out what we can find in the middle here. So Swiss franc is not really doing much. Remember, Swiss franc was a hot currency going into the Swiss bank rate hike, and after that, we really haven't gone anywhere. I mean, we got the high over here and the low over here. We're just still in the middle here. So I'm still waiting for this to clear out one way or the other so we can pick a direction on that. And same thing with the euro. We talked about a euro. I mean, this thing is just flatlined for the past few days. British pound, which again had a nice reversal, is also going this little range bound price action as well. So there are very few places where we can actually find a good, decent opportunity, unless we continue to hammer down in the same direction. I think Kiwi looks a little bit extended to me. If I have to take a look at a currency that does not look that extended, which is again the Australian dollar. Australian dollar is slowly falling, but notice that it hasn't really had that big capitulation move. And as far as the RSI, it's still heading lower, but it's not really gotten to the oversold level. So maybe where we can find an opportunity for a fresh short. But outside of that, CAD, again, holding in, don't really like it. Don't really love it as a buy, don't really love it as a short. And then the dollar, which again, consolidating a little bit here. So very difficult to find decent setups. Again, we can find some very short-term opportunity, but notice that those short-term opportunities don't really last that long. Again, we see this little correction pattern overnight, but then we got a nice little recovery today. And even though we got a nice little rally, I mean, take a look at Kiwi dollar. I mean, we almost we went almost, we're about 1.5% on this. So there's good shorter term opportunities. But if you're looking for these rallies to hold, again, like I said before, market needs to make a turnaround as well. And a day like today, it looked like markets were making or turning its corner, but so far it looks like markets are staying the way it is. Another thing to pay attention to is the bond yields, because that's really what driving all these moves. And you can see the yields were actually pulled back last night, which again pulled the dollar down a little bit as well. So I think you got to pay attention to the bond yields and see which way the yields are going, because I mean, take a look at a daily chart on the bond yields. I mean, we went through this consolidation period for June, July, August, and almost mid-September, and then look at that big move here. So yen is really the breakout in this bonds yields is really what driving the markets lower, and is also putting pressure on the dollar to even go higher. So at this point, I mean, in the last few candlesticks here, you can see we got this one candlestick down. We have to really pay attention and see where the bond yields goes. And if the yields start to weaken, then that will be maybe an early precursor sign. Maybe dollar might start to top out a little bit there. But again, all of these things are connected, where one thing has to come down, and then that will put a relief rally in the other places. But right now, if the markets levels stay where they are, I think the dollar not really looking to short here, but not really looking to buy here either. I mean, looking for some consolidation, or if you're looking for an opportunity, those opportunities has to be shorter term base. Otherwise, you're going to get some volatility, some movement, but they might not last as long. I'm also paying attention to dollar yen. Notice the dollar yen is still staying strong. It's back at the resistance. And remember, we were watching this 145 to 146 area, which I think could be a level where we can see Bank of Japan intervene again. So we have seen this level to get defended over and over, and we are back at that level again. So pay attention to that one. If the dollar yen weakens, I think that would open up an opportunity on some of the yen crosses. So let's actually take a look at yen crosses across the board. Because, I mean, after that big move, I mean, look at the highs and the lows of that candle. We really haven't gone anywhere. So we're just consolidating a little bit. So I think this is where consolidation, as long as, you know, it stays in this little range and actually fails later on, will be a decent opportunity. We are seeing the same thing happening across the board, and some of them are actually weaker, like Aussie Yen actually broken that low on this candlestick here. So that looks much weaker. And remember the daily chart, we are off from those highs. Now looking at Kiwi Yen, we'll probably see more aggressive price action here in Kiwi Yen, but following the same suit. You know, it's down, it's fallen down quite a bit. But I think outside of the Aussie and the Kiwi, let's take a look at other currency pairs that probably be doing the exact same thing. CAD Yen pull back, and then all these yen crosses have actually pulled back deeper after this breakout that took place over here. So some consolidations, CAD Yen, Swiss franc yen, seeing some consolidation. Dollar yen is at the highs. So at this point, it seems like Kiwi and the Aussie is really the one in play. But on Thursday, when we get the Canadian GDP, probably you'll see some more movements out of that as well. But right now, the dollar is really making a move, and I think outside of the dollar yen, I mean, let's take a look at dollar Swiss franc and see how that correlation is playing out. And you can see dollar Swiss franc is also marching towards that parity level as well. So at this point, seeing some consolidation happening in these dollar crosses. Maybe they're up for another run, but as you can see, the chart setups here, I mean, these seems like a little bubble back here. So like I said, use the caution here for the dollar, not really looking to short dollar, not really wanting to open a position on the long side unless you are trading on a shorter term time frame, you're looking at that opportunity, and then you're not really holding it for too long. But outside of that, not really seeing an opportunity. Yen is what I'm interested in because of this little high base here. Now, question is what we want to pair with, and right now, I mean, Aussie looks weak and Kiwi looks weak. Those are the two places. But outside of those two, we can see if the yen, the Swiss franc weakens, then we can take a look at Swiss franc yen. That might not be a bad idea, especially if this, you know, if you look at the highs and the low, this is sitting more on the lower end of the side here. So this needs to break that 144 to really open that door. But take a look at the way it is in the longer period. I mean, these are I mean, you're seeing some massive runs in these pairs. So I think some more pullback if this level breaks. So Swiss franc yen and CAD yen is kind of sitting in that similar setup here. But outside of that, we probably see more weakness in Kiwi and more weakness in the Aussie. So outside of the Aussie and the Kiwi, let's take a look at just those Aussie Kiwi together. And I think at this point, Aussie still seems like a better long, and Kiwi seems to be better short because of that negative correlation here. Getting some pullbacks in between, but these pullbacks seems to be just running up and buying opportunity here. So right now, as much as we see Kiwi extended, it seems like that's the only place we can find. And again, this is where you don't really have to trade these markets. Like I've said, like we'll probably see better trading environment the following week. This week, I think markets are likely to consolidate or try to figure out where it really wants to go. So I would focus a little bit more on the news event on a Thursday with the Canadian GDP. So that's a CAD GDP on a Thursday. But in the next 24 hours, looking for some short-term plays if there is any. But outside of that, pay attention to the equity markets because that's what's really driving the market sentiment. Take a look at the bond yields and then take a look at currency markets. They're all kind of moving in tandem. So we just have to make sure we are trading the markets in front of us, not the markets that we want it to be. So thanks. That's all for now. Thanks for joining and have a good evening. We'll see you next update. Cheers.